In today's video, I'm going to share with you guys 3 volume profile day trading strategies you can start using today. Now, the first volume profile strategy we're going to talk about is going to be the volume profile rotation. So if you've watched any of my analysis videos, you hear me talk about this day in and day out. Now, there's 3 components of the volume profile that you need to be familiar with. We need to look at value area high, the point of control, and value area low. Now, the way I have my profile set is my value area is 68. And I have a whole volume profile series I'll link at the end of this video. So if you get caught up with some of the terminologies or you want to see the settings that I use on my volume profiles, there's no need to worry. I show it all on NinjaTrader as well as TradingView. Now let's talk about the volume profile rotation. Now in this example, I'm going to look right here on April 3rd, and we're going to simply look at value area high. I will give you an example with value area low in a minute, but what I'm going to do in this example is draw a horizontal line across value area high. Now there are settings where you can have the volume profile automatically draw it for you. Now, as I come in to trade these levels, what am I expecting? Well, one, if we're above value area high, I'm expecting the market to go higher. However, once the market has already been above value area high, then as we start to come back down and we break value area high, then I look for my first target at the first high volume node on the profile. In this example, it would come in about 52.75. Now, once my first target is hit, then I go ahead and move my stop loss to break even. Now, in this example, my next target would be the point of control. Then below that, my next target would be all the way down here at value area low. And in this case, we actually had a complete rotation all the way down plus some. Now, you're probably asking yourself, does this only work on the sell side? No, it works on both buy and sell side trades. And here's an example of it on April 5th as I'm recording this video. On the price action we got today, if we draw a horizontal line right across value area low, you might say, well, Mike, why are you picking value area low? Well, because we already see prices below there, right? That's the only reason behind it. So once we start breaking above value area low, what am I expecting? Well, here's going to be the next high volume node on the profile. So this then becomes target number 1. Target number 2 is this other little section, this other little node right here. Then the next one would be up here, then the point of control, and then value area high. It's a very easy concept. And I can also make the statement that as long as we are trading above value area low after already being below it, then I have a bullish bias. So I'm looking to be on the long side of the trade. So it takes away 50% of the equation, because as traders, as we're watching price jostling up and down, we're always asking ourselves, man, should I be a seller? Should I short the market? Or should I be going long and looking for a great buying opportunity in this market? Because the last thing we want to do is get caught holding the bag. Now, using that same concept, we come back over and we look on April 4th when we had a major stock market sell-off in the afternoon. Since we were already above value area high, once we came below value area high, then I knew right then I need to be on the sell side of the market. And let's talk about where would that change? Well, there could be 2 areas. One, if we got back above value area high, then I'd want to change my bias to be on the long side of the market. Or 2, as we came down to value area low, if we would have ever came back above it, then I would have been looking for the rotation back up towards a high volume node, in this case, the point of control, then over here at the next high volume node, then right up here towards value area high. So as you can see, it also gives us, a way to judge, should we be long or short this market? One thing to note though, if I were to place a trade, like in this example right here, where we wicked above value area high, and then we came back down below it, and we said, oh, here goes a volume profile rotation to the downside. If indeed I got involved in this trade, as soon as this candle right here came back above value area high, I would not stop myself out of the trade. I would leave my stop where it was. Now, there's two different ways we can go about this. One, if you already have an order entry technique that you use to enter the market, just use your normal stop loss. However, just change this to the profit targets off the volume profile. Or 2, you can actually put it on the other side of this candle. So in this case, if we were short as we came above it and back down below it, we could rest our stop loss right above the top of that candle. So we wouldn't actually be stopped out until over here when price came back up towards this level. That's the way I traded it when I had a full-time job and I was busy working. I didn't have time to micromanage my trades. Now, with the volume profile rotation, not only can we use this on the daily profiles, but if you listen to my morning analysis videos, I also break down and give out the overnight volume profile levels, which I use in conjunction with the daily profiles. And in this example that we had right out here on Friday, what do we see? Well, right when the market opens up, we dipped above value area high, and then what do? We started melting down. We hit the point of control. We hit value area low. Then once we got below value area low and we started to come back up, our bias had to shift to being back on the buy side of the market. And then look, we hit the point of control. We hit value area high. Then for a brief moment, we dipped below value area high. So if you flip short here, wherever you get stopped out of this trade, then we need to keep looking to be on the buy side of the market. Now, you're probably also asking yourself, will this work on the weekly volume profiles? And I got to say, yes, indeed it does. And here's an example right here from this week. When the market opened up on Sunday night, we opened up above the prior week's value area high. And I talk about this every day in my analysis video. So you want to make sure you're subscribed and you have the bell notifications turned on for all. But then what do we do? Sunday night, we opened up. Then as we started to come back down, notice we broke below value area high. Next target would have been the point of control. Next target all the way down here at value area low. And when we look at this from a range perspective, from value area high all the way down to value area low, in this case for the S&P, that could have been good for 39 S&P points in the futures market. Now, the way I would have wanted to play this, if you don't have an order entry system into the market, would be if you got involved on this candle right here, your stop loss would be right up here. And if we look at this from a reward to risk standpoint, you would risk 13 points and essentially with your runner trying to make 39 points. Now, with the volume profile rotation, as soon as I get target one off, I go ahead from that point on and move my stop loss to break even. That way, if the market bounces back up and we start breaking back above value area high, I am stopped out of the trade. Then I'm ready to look for my next trading opportunity in the market. Now, strategy number 2 is going to be value test. And you might say, Mike, what in the world is that? There's no need to worry. We're going to explain it in great detail here in just a few moments. But I want to remind you guys, you don't want to miss strategy number 3 because I'm going to show you guys a trade example from entry all the way to the exit. So let's talk about what strategy number 2 is, the value test. And we actually had one of these examples on Friday. So here's the first criteria we must see. In this example, on Thursday, we closed outside of value. Now, it doesn't matter if we close above value area high or below value area low. In this case, Thursday, we closed below value area low. Now, what this basically sets up is within the next 1 to 2 trading sessions, and I define a trading session as whatever your volume profile is set to. If it's set to a week, then one session is a week. If it's set to a day, one session is a day. Let's just keep it very clean like that. And what I'm expecting in this example is we're expecting the market to come back up and test value area low. And we exactly did that. Now, I was a little bit gun shy, to be honest with you, on this example because we closed so far outside of value. However, if we look at the NASDAQ had the very same example. Value area low was way up here. We closed all the way down here. Now let's look at this. From the closing price all the way up here towards value area low, we're looking at 221 points of movement out here in the NASDAQ. Now with this, I have to give this trade a lot more liberty to swing. This is a type of trade where I typically will try to scale in. So if you're a trader that normally trades 2, 3, 4, 5, 6 contracts at a time, then what I would do is just nibble in, toe in the water. Then if it goes against you, you have a little bit of room to add to it, knowing that this is going to be your final destination on the trade. And I'm going to show you guys, this doesn't just only work on the daily chart, which we're going to go through some examples here in a moment, but it also works on the weekly profiles, which we'll go over some of those examples as well. Now, it's not every day that we close outside of value. Here's an example right here where we close outside of value. You can see we close way above value area high. The next day, what do? We chopped around. It wasn't until the second day where we came all the way back down, testing out value area high, and we almost made it down towards the point of control. Now, as we come over and look at the next example, we have value area high right down here. You can see we closed way above it. Now, the next trading session, we stayed above it. We never came down here. The following trading session, we never came down there. It wasn't in this case until the third day that we came back down there and we tested value area high, Then the market rejected back up, and it was a while before we ever came back down towards that point of control. Now, the reason I want to bring this up is whenever I get into this type of trade, you might say, Mike, I don't have enough margin in my account to hold the trade overnight. When I had a smaller account and I was trading this strategy, one of the ways that I would handle this is if I started building my position over here on this day, I would essentially take the trade off. Whenever your broker goes away from the day trading margins, then as soon as Asia opens back up the next day, I would simply start putting the trade back on, hoping it goes down there. So in this case, you had to open the trade on one day, close it, open the trade this day, close it, open the trade this day, and then finally close it before you made it all the way down there, hitting your take profit location. Here's another example. This one's not as exaggerated. You see value area low right up here. We close below it. Then in Asia, we dip down. New York, we put the bottom in. Boom, we come right up. Not only do we get the value area retest, but we also hit the point of control and made it all the way back up towards value area high. Now you might be saying, Mike, does this only work on the S&P 500? Well, no, we already showed one example on the NASDAQ. Then as I scroll through my chart, here's another example. We close slightly above value area high. As soon as Asia opens, boop, we get the retest, real clean, real simple. Here we go. We actually got back-to-back examples, right? This one we closed above value area high, but on the day right before it, we closed way below value area low. So what do we expect? Within the next day or two, it's highly probable we're going to come back for that value area retest. And we actually got it right here. And we were also able to take out the point of control. Then we actually made it right up here towards the other high volume node on the profile. And it's very important to pay attention to the low volume areas on the profile as well as the high volume areas. The high volume areas are the part of the profile that sticks out further than what we see on the valleys. So now when we come over and look at the weekly profiles, does this also work? Yes, right here, we close above value area high. What do? Whoop, the next week, we come right down towards that level. Now, sometimes on the weekly, I've seen the weeklies take more than 2 sessions. I've seen that on the dailies too. So you got to be a little bit more careful on the weekly charts. On the weeklies, I usually like to use the value area more as a target location on a runner trade that I got into on a much smaller time frame chart. For instance, here's an example on the weekly where we close way above value area high. Now, what I will tell you guys, like in this example, when we close so far outside of value, expect that it's going to take a little bit longer to come back down there than 1 or 2 trading sessions. So in this case, if I'm playing this level on the weekly chart, I'm simply using this for a runner target. This is not going to be my primary strategy because depending on your account size, you may not have the margin to hold this position for multiple days or overnight, should I say. And it'd be a pain in the butt each night for 2 weeks, 3 weeks, however long it takes to come all the way back up there to keep trying to do that type of trade. So for me, it doesn't make as much sense on the weekly chart, even though it still does work. I'm more along the lines, I like to use this level on the weekly for high probability target locations. Now, the third strategy, we're going to be dealing with low volume nodes. You may also hear me call these minus development areas. And in our community, we also call them caves. You might say, Mike, why do you call low volume nodes caves? Well, if we look, what do we see? A big little divot in the profile, and it's kind of like a cave, right? Terminology in terms of this really does not matter. It's all about understanding what we're trying to do. Now, when we get these minus development areas, caves, whatever we're going to call them, think about this as inefficiencies in the market. Now, whenever we get an inefficiency in the market will usually come back and try to test that price level. And a lot of times we'll get a rejection out. However, when we really start getting through, let's say on this case, the other side of this, then we're likely going to the whole other side of this minus development area, trying to trade within this inefficiency area. One of the examples, look right over here on April 3rd. If we were to simply take our tool and map out the minus development area, notice, what do? When we broke up above, when we came down, we actually sliced all the way down towards the next volume area. Then we came back up. However, a lot of times what we're going to see is we come right down to the top of it and then we reject. Once we start getting deeper in it, we really increase the odds. We're coming all the way to the other side and over to the next high volume area on the profile. Now I want to show you guys some examples. One of the examples we are going to be dealing with is going to be right up in this minus development area as well, which occurred on Friday. But let's scroll back through the chart. Let's see how often in time does this actually work? Well, if we look right here, we have a huge inefficiency, a huge minus development area. This whole area here, the market comes up there, we finally get the rejection and we go back lower. That's not really the best example. I don't like it when they're really that wide. I like it when they're a little bit tighter than that. Now, one thing I need to mention before we continue to scroll back and look for examples, I also use this strategy on developing volume profile levels. So unlike strategy number 1 and strategy number 2, where I rely on a profile that has already been completed, because it's a lot harder to hit a moving target. And what I mean by this is if you're dealing with a developing volume profile, then the point of control is constantly shifting. Value area high and value area low are constantly shifting as new orders are hitting the market. So those two strategies, I prefer to use profiles that have already been completed. But when we talk about, strategy number 3, I use this on not only profiles that have been completed, but also on developing profiles as well. And we're going to show an example here in a few moments. So here would be one example over here. If we look over here on March 19th, we have very poor market structure. The profile is very thin all along this area. However, we also have a little area right up in here. Notice what we did in Asia. We kind of go down, we come right up to that level, boom, we reject right back down. Now, I don't simply want to place an order right there and just say, you know what, I got to get in. Let's go ahead and get into this trade right here, right now. Yes, that sounds fine and dandy, but I want a better way to enter this market, meaning either a candlestick pattern or some other type of indicator you may have to give you a buy or sell signal in the market. We come over and we look at this one right here. Here's a minus development area. What do we do the next day? All right, kind of consolidated. Boom, we come into this area. Big rejection all the way back down. Now, in this case, what do we get? Well, we get the minus development area trade, but look what else we also have along with us. Once we start coming down, we then get the volume profile rotation all the way down. If we look at the range from value area high all the way down to value area low, that's roughly 22 points. And then look what we have at the bottom of the prior day's profile as well. We have another minus development area. So if you got this entire move from all the way up here down towards, we'll just say the middle of that minus development area down there, that's roughly 39 S&P points. And this happens on a daily basis. And you can really pick this apart with the developing volume profiles. I also want to show you, this doesn't only work over there on the daily profiles. If we look right over here on the weekly, we can see that we had a minus development area right here. What did price do? We just barely overshot it a little bit. Boom, rejected, right back up once again. If we look at the next example, right? Look at the one right here from the week before. What did the market do, right? This profile basically closed right here. We came right up into it. We overshot it a little bit. Boom, right back down. Now here's another example. If we look at the composite profile on the right, that basically takes into consideration all the price action that has occurred on my chart. And when we look at this, right, once we got above this other volume area, which we're talking about the analysis videos, we were likely going to go ahead and trade in this range and probably try to make our way towards the other side of this. Now, what we really want to see is you want to see rejection as we get into this area. But one thing with the MDA zone minus development area or cave, if we start breaching into it and we start showing signs of strength, in this case as a buyer, then we're expecting we're going to come all the way back up to the other side. And we just barely missed hitting the other side. We came right through where that volume is, and then we rejected and started to come back down. You might say, well, Mike, that doesn't look like a whole lot. If you look from that wick there to this closing candle, that's 17 points. But if you look at from the high to the low of the prior, to the next candle, that's actually 35 S&P points. Now in this example, we're going to take a look at a developing volume profile and pay attention to the minus development area or the cave. Now for this example, I'm actually going to use NinjaTrader's playback feature. And what I want to do now is I want to simply go ahead and mark off this zone real quick. This is the cave, the minus development area, which basically shows where we had inefficiencies in the market. Now I'm going to simply hit play and I'm going to speed this up here just a little bit. And let's just see how price actually comes down and possibly interacts with this level. Now I did trade this level on Friday. That's why it's fresh in my head. Now note, when I pause this, look how we just came into that zone. We tested it. Boom, we're starting to pop all the way out. However, I am going to tell you, we don't make it all the way back up here, but I want to give you an example of interactions with an MDA zone. Then we're going to actually go and actually trade this and show you guys how this pans out. But look how big of a rejection we got out of this area. We didn't make it quite up towards this volume area, but this is the next high volume node before we get a little valley within the profile. So we did make it up here to target number 1. However, I do not believe it makes it all the way to target number 2. Now, if I simply go back and I'm going to rewind time, all right, this is the awesome feature that NinjaTrader has. So if you want to become a better trader, this is one tool that can help you do that, because as we go to place a trade in this situation, guess what? Any money lost is not a real loss. Only thing we have lost is time, because as soon as we rewind it, poof, our money is back in our little demo account that we're going to show in this example. So now what we're going to do is I have this zone already drawn out. However, now let's go ahead and go over to, let's say, a 5-minute chart, and I'm going to turn on Chart Trader real quick. Now I went ahead and selected the ATM. So I want to see, do we get any reason to enter the market as we come down towards this level? All right, there we go. We get the test. All right, we just tested it with the wick. However, I want to see some type of confirmation that tells me to get in. Look what we get. We get a hammer candle. So guess what I can do now? I can simply, from this standpoint, go ahead and buy the market, put my stop loss right below that candle. Then I can come over here to the 30-minute chart. I'm going to turn on Chart Trader real quick just to make this easier. I'm going to put one target right up here. Then I'm going to put the first target right up here at this volume area on the chart. Now I'm going to switch back over to the 5-minute chart, and let's just see how this unfolds, right? Now, one thing I always like to do, especially when I'm dealing with the volume profile, is if I get target 1 taken off like we just did there, then I like to go ahead and move my stop loss to break even. Now, I do think that we end up running out of time. I'm going to speed this up. Let's see how this all shakes out. Does our next contract get taken out for break even? There we go. All right, so our second contract got taken out for break even. But look, even with getting taken out for break even, that was essentially $512, and we gave ourselves a chance for quite a large runner. And this was all systematic, right? Volume profile already gave us where this area was, and as a trader, this is something where we can start stalking the trade, right? Instead of being reactive, saying, "Oh my gosh, what should we do? We just had this move. Do I get in now all the way up here? Oh no, we don't want to do that." Instead, we see us coming down to this level, and you're like, "Oh yeah, give me something, give me something. Let's get in this trade." All right, very clean, very simple. Now, I'm going to show you another way that we can essentially play that same play. So I'm going to go ahead and rewind the tape. All right, so we're going to rerun this example once again. However, I'm going to use a different entry technique. You can see we already have our zone mapped out. Then I'm going to go ahead and put this to a 5-minute chart so we can compare and contrast from last time. All right, so I'm going to bring in this chart right over here. This is a chart. This is going to be an algo box chart. This is what I use for my entries. I use volume profile for majority of my analysis and targets and ideas, but for my pinpoint entries, I love to use algo box. And if you want to get the best deal on algo box, bar none, this month, the Enigma can be included along with the automated bots. Use the link in the description box down below. It'll direct you to my website. And from there, you have the opportunity to buy algo box at a discounted price. And if you're lucky enough, and if you're one of the lucky few that received the pop-up, you can save additional on that price. Now, when we come over here and we look, I'm just simply going to hit play. And what we want to know, the Enigma is so simple, all right? If we have a green yin-yang symbol on the side, this means we're looking to be buy side. Stop loss goes below the Enigma. However, we're still waiting for price to get into our zone. Price has not made it to the zone yet. So let's just wait. Do we make it down towards that zone? Well, we already know that we do. All right. So I'm not taking that Enigma, and I have training around the Enigma. No, AlgoBox is not mine. It's a tool that I bought for myself. And I can tell you, I paid substantially more for it than what you can get it for off my website right now. But essentially, when the moving averages are facing down, I'm not looking to trade the Enigmas to the long side unless there's something else in my favor. And in this case, if we can get an Enigma, once we come into our little zone, let me just slow this down because I think one's going to pop up here in just a moment. I'm going to show you the difference of how I'm going to actually trade this if indeed, all right, there we go. We get an Enigma. Well, guess what? Now in this case, this is what I do with the This is how I use AlgoBox for my pinpoint entries and the volume profile. I'm simply going to get in, look how much less risk I have on this trade, right? And look, I'm in before this hammer candle has ever been plotted on the 5-minute chart. So if we look from my entry down to here, we're looking at roughly 5 points. I'm going to leave this right over here. That's 5 points of risk. I'm going to leave my first target where it's at. Then I'm going to come right over here to the volume profile. I'm going to grab my second target to where the first target was before. All right, so I'll put that back over to the, all right, so now we're back on the 5-minute chart. I'm simply going to hit play. All right, let's see how this plays out. Maybe we'll speed it up here just a bit so it doesn't take all day. All right, look, we already got target 1 off. However, since my stop is so tight, I'm going to leave it behind the Enigma. I usually let it get a little bit further ahead before I'm going to move my stop loss to break even with an Enigma type of play. Because my trade idea is not invalidated. Keep in mind, we don't even have a hammer candle over here on this chart yet, and we've already been able to take off target number 1 in this example. I'm going to speed this up just a little bit more. Speed it up a little bit more. Oh, there we go. We get another Enigma. So what can I do? Now this is a double Enigma. I'm going to simply add to the trade. However, guess what? I'm going to take both my stop losses now and move them up right behind this Enigma, and look on the 5-minute chart. We do not even have the completion of the hammer candle yet. Now I'm going to take the second target. I'm going to push it up and out. Then I'm going to go over to the 30-minute profile. And that actually, I did pretty good. I put it right here where it needs to go. All right. So essentially all I have to do is now we're going to go back to the 5-minute chart, and let's just see, do we get another target off before the 5-minute candle closes? Look, we got a second target off, and this candle is not even closed yet. All right, so let's go ahead and we're gonna keep playing this real quick. All right, so now we just broke the top of that candle. Let's go ahead and measure the risk. Keep in mind, our initial risk on this trade was 5 points. If we look from the closing price right there down here, that is 9.5 points that we are risking on this trade looking at a 5-minute chart. You might say, well, Mike, maybe I don't have to do a 5-minute chart. What about, let's say, a 3-minute chart? What do we see on a 3-minute chart? We can let that load. Do we have any hammer candle or any bullish reversal pattern on the 3-minute chart? I don't see any. Well, we surely must have one on the 2s, right? Oh, I don't really see it. We kind of have an inside bar, but essentially that puts us at the same entry point, and our stop loss would still need to go down where it is. Well, what about a 1-minute chart? Let's see if a 1-minute chart would have gave us a better entry. Look at the 1-minute chart. We had an inside bar, and where do we break it? Roughly in the same location. So now what I'm going to do is I'm going to bring this chart right back over, and let's just go ahead and play it out. Let's just see, how this trade plays out. Now, as we come up here a little bit, I am going to move the stop loss to break even. Once our first volume profile target has been hit, we almost just hit it right there. We're close enough. I'm going to go ahead and actually, I'm just going to hit my G5 hotkey. Stop loss goes to break even. And let's just see. Let's see what the P&L difference is between these two type of trades. We got another Enigma. I'm not going to add to it because here's why I'm not going to add to this trade. If we look, we come back over to the 30-minute profiles. All right, I already have targets, additional targets for my runners. So there's no need for me to add another contract onto this trade. So I'll simply go ahead and turn on the control head. I'm going to speed it up here just a little bit. There we go. We got another target off this trade. And then we should come back down and get dinged out for break even. And look, if we would have added to this Enigma, we would have made a little bit more there as well. If we would have added to this one, we would have got a target number 1 off on this one, which is going to be really funny because now we would have lost less. If I would have added to this, my stop loss would have been right below that Enigma right there, which I'm kind of curious how that would actually have played out. How much would that have affected our P&L compared to what we have now? There's another Enigma I can go ahead and add to the trade on. And with all these Enigmas, the ropes, the moving averages are facing in my direction. Let's see if this one actually works or if it's going to get stopped out as well. I'm going to speed this up here just a bit. Try to, conserve some time out here. What do we see? We're trying to make a run. We almost make it to that target. And then, I think this is where we're going to come down and we're going to get stopped out for break even, or so I assume. And I want to keep, I want to compare apples to apples in this scenario. And let's just see what the difference is going to be within the P&L. I don't remember it taking this long last time. I feel like it's taken a lot longer to hit hit our break even target. There we go. All right, break even. All right. So now by using AlgoBox for my pinpoint entries, I was able to add to the trade. So in the first example, just trading off the 5-minute chart, one downfall is we had higher risk on the trade. All right, we had 9.5 points of risk on that trade. On the algo bar charts, I only had 5 points of risk. That's almost half the risk. And if we look at the P&L, $1,100 in P&L versus 500-ish on the first run off the 5-minute chart. This is why I love to use AlgoBox for my entries into the market and use volume profile to basically let me know trade location number one and additional targets moving forward. All right. So what can really separate an average trader or a break-even trader from a great trader is being able to have runners and have logical places on the chart where price is likely to go and have a way to take advantage of that movement in the markets. Now, if you guys are struggling with volume profile terminology, or you simply want to see the settings I use for my volume profile charts on NinjaTrader and TradingView, watch this playlist right here.